Hi, I'm Caleb Merrick, Team Leader of the Finance team at Momentum Wealth, and I'm joined by one of our finance brokers, Dylan Marinelli, and we're here today to share our biggest tips for first home buyers looking to finance their first property. Thanks for joining me, Dylan.
Thanks, Caleb.
One of the topics we've recently touched on in our finance ebook has been around credit reporting and how it can affect a buyer's borrowing capacity. So this leads nicely into our first tip. Keep a clean credit record. Dylan, do you want to take us through this?
This is something that all first home buyers should be aware of. When going to apply for a loan, the bank's going to have a look at what your serviceability is like, what your cash position is like as well, but also they're going to have a look at what your credit history is like. So they're going to have an understanding of what your credit score is. Essentially what they're going to look at is, what credit card limits you have existing, if there's any personal loans, and what they want to see is that you've got the ability to continue to make those repayments, and more importantly, that you've been making those repayments on time. So having a look at what your character's like when you've got credit or debt on hand as well. So it's really critical that clients looking to prepare to buy their first home loan don't have unnecessary high credit limits or credit cards that they don't use, because at the end of the day, if you haven't been able to make those repayments for whatever reason, it's going to raise a red flag from the get-go.
Exactly. And another thing as well to probably be mindful of is the number of times you apply for credit. If you're going to take out a credit card, you don't want to be going around to 6 or 7 different banks and putting in an application every time before choosing one. They're all going to show up as credit inquiries on your file, and that too many of those in a short amount of time can be seen as a negative as well.
Yeah, absolutely.
Our second tip, preparation is key. Now, I guess the home loan process starts well before you actually visit your broker or your bank. So, Dylan, do you want to elaborate a bit more on what this is?
Yeah, so preparing for your home loan should happen well before you actually go to your bank or your broker. One thing we always recommend to our clients is having an understanding of what your monthly expenditure is. So putting together a monthly budget planner, you'll be able to see where your spending habits are, where you're spending your money, and if need be, taking into account what your monthly repayment's going to be when you take on the home loan. Is there areas that we need to tighten up so you're going to be able to afford those monthly repayments? It's important that once you do go to the bank, what they necessarily allow you to borrow may not actually be what you can afford. So we'll never stretch yourself too far. So having an understanding of what you can actually borrow and what you can spend each month, whilst also including that monthly repayment is critical.
Yeah, and there's a very big focus at the moment with lenders on living expenses as well. So I guess a misconception that first home buyers, having not gone through the process before, may have is the fact that, I don't have my home loan yet, so I might be a bit frivolous on my spending, but I'll tone that down once I get that loan. Now, the problem with that is the way lenders assess your living expenses is historical, so they're going to look at those historical expenditure, and that's what they're going to apply to your serviceability as well. So you might have to start, making some adjustments now, and like you said, factor in that home loan repayment as well. That'll definitely set you up well to help budget it and not be in for such a shock when that first repayment does actually come out.
Yep.
Our third tip is to factor in all the costs. Now, this is something that quite often catches buyers out. So, Dylan, do you want to explain what some of these costs are?
Yeah, so firstly, you'll need to have an understanding of what your deposit you're going to require for the bank. The associated costs are the ones that do catch buyers out. So your conveyancing fees, we always recommend buyers do a building pest and electrical report as well. The other one, which is pretty common for first home buyers, is if you're putting in less than a 20% deposit, you will be required to pay a lender's mortgage insurance fee. This can get capitalised onto the loan amount, but will be required as an associated cost as well. The largest associated fee is your stamp duty. So all buyers will be required to pay that transfer of land government tax. And it can be substantial at times, so it's important that you factor all these costs in when you're trying to add up what your required funds are to complete your first purchase.
And just on that stamp duty, as a first home buyer, you may be eligible for a concession, which leads us nicely into our next point. Our fourth tip is to understand your eligibilities. So I'm a first home buyer, Dylan. what is the government going to do for me?
So first home buyers may be eligible for several grants and concessions, with the first being the homeowners grant. So if you're purchasing a new or recently built property, you may be eligible for that $10,000 grant.
What if I'm not looking to build or buy something new and I want to buy something established?
Yeah, so if you're buying established, you may be eligible for the stamp duty concession. That goes up to $430. If you're buying from $430 to $530, you may pay a prorated rate. The closer you get to the $530, the more the stamp duty will be.
And I guess there is eligibility criteria, obviously, for these grants. And they differ state to state as well. So the best place to look for this is on the government websites.
Yep.
It'll have all the information you need regarding this. Our final tip is to speak to your broker about your longer term plans. Now, often buyers, particularly first home buyers, are really zeroed in and focused just on the rates. But these aren't the only things we factor in when recommending products and structures for our clients. So can you run us through a few examples, Dylan?
Yeah, so we see property as a 20 to 30 year journey. We don't want to just think about the short term gain. So first home buyers might get drawn towards those really low rates that get offered to first home buyers, but it's important to remember what the features and products are available behind that. For example, if we can factor in, over the next 5 to 10 years, we might be able to increase your income, you might have a large savings portion. With those savings, you might want to offset your debt. On a fixed term, you might not be able to do that if that's not available for first home buyers with those special honeymoon rates. So it's really important to consider what your longer term plans are and factor in what your income position is going to be like moving forward as well.
Sure. I guess another example to add as well, your plans with the property. So you might be buying it as your first home to live in for a short period of time, but you might also have plans to turn into an investment down the track. So you want to make sure that you're factoring in both of those two strategies when selecting your lender and your loan product, because you want them to complement both strategies.
Yeah, exactly right.
That wraps up our first home buyer tips on getting finance ready. Thank you for joining us. If you would like more information or would like to speak to one of our brokers, please don't hesitate to get in touch with us.